G'day everybody, just wanted to give you a few thoughts on the fundamentals of gold, just as a bit of an update and a bit of a perspective on the gold market. Just before I do that, just a reminder, this is general advice only. So a bit of a status update, looking at gold overall as a big picture investment, and I know a lot of people tend to focus a lot on the daily ups and downs, but really gold should be seen as a long-term investment, more akin to property than normal share trading. And I guess you've got to be comfortable with the fluctuations. When you own property, you don't know the price on a day-to-day or week-to-week basis. There's not a sign out the front of your house that says what it's worth on any given day. And I think you've got to look at the gold market in the same way. Just look at the long-term trends, understand the long-term fundamental drivers, and be comfortable with it as an investment and certainly as a hedge against nasty things that might happen in the future. Now, looking at gold stocks at the moment, relative to gold, stocks are just ridiculously undervalued. It's absolutely crazy where they're trading at the moment. If you look at the HUI Gold Index, which is an index of a basket of unhedged major gold producers, it's currently, or it was trading in January of 2008 at a level of 465 when gold was trading at $900 an ounce. Now we're back again at around the 465 mark, and gold is $1,670 an ounce. So on that ratio, it doesn't make a whole lot of sense. And the HUI was low in 2008, and it's low now. So this is an anomaly that, to my mind, is unlikely to persist. And I've been saying for months now that there'll be probably a very significant surge in gold stocks to play catch up. So the future for gold itself, I believe inflation is now starting to become, or the expectations for inflation are now starting to become real again, and people are not looking so much at a deflationary environment as they were through last year. The Fed's broad measure of money supply has risen 9.4%, so there's still the amount of money being created and pumped into the system is still expanding, and ultimately that's what inflation is. Inflation is really a measure of the increase in the money supply. And QE3 hasn't been killed off yet. I still believe the Fed will still keep rolling out some form of monetary stimulus or some pea and shell game that they seem to be able to create from nowhere. So the future for gold stocks, relative to the S&P index. The S&P, as you know, since October last year has done extremely well. Gold stocks haven't. They've underperformed by a long way, and I believe they are due for some sort of catch-up. We're going into a seasonally stronger time for gold and gold stocks. March is quite often a bit weak and shaky, and we've certainly seen that in the last month. In general terms, capital is coming back into the stock market, and inevitably when capital comes back into the stock market, it goes into the perceived safer end first, and then as that trend progresses, then money tends to go looking for the more speculative ends of the market. Not that I think gold producers are speculative anymore. I think they're great solid businesses, but certainly the perception is that that's more of the punter's end of the market. And I think ultimately as we get towards the end of this run, which may finish sometime in May or early June, then I think we're going to see capital coming back into that riskier end fairly soon. So I think we're in for a pretty good period for gold stocks. Now, just looking at the fundamentals for gold businesses in general, the price of a stock, whether it's a gold stock or not, the price of any stock is a fraction of the future underlying profit streams that are expected to be generated. So if profits are rising or they're already high, then stock prices rise if you give it enough time to unfold. That's pretty much a given. Now, gold producer profits have been rising strongly and are rising strongly, and in 2011 on a global basis, the average profit margin for gold producers was $915 an ounce, which is just humongous. It's never been that high before. So we can expect that prices will ultimately follow at some point in time, and I think we're not that far away from that point. For the current gold stock prices to make sense, the gold price would need to fall to about $900. That's the other way of looking at it. And I just can't see, with the current backdrop of what's going on, the increase in the money supply, which is increasing around the world at about 7 to 8% annually, how that possibly makes sense, that gold could fall to $900 an ounce in that kind of environment. Just really doesn't make any sense to me at all. Let's just have a quick look at the gold price on a weekly basis. I've shown this before, but this is, I believe, the pattern that's unfolding. We had a phase 2 correction, a wave 2 correction that occurred from August of 2011 to the end of the year. It went down in a 3-wave pattern, which is very typical of crowd behaviour, and we're now going into quite a strong leg in gold, and that will also advance in a series of waves. We've had one reasonably strong wave up from the end of December to the latter part of February. We've now had a correction of that move, a 61.8% correction of that move, which again is spot on crowd behaviour, and I believe we'll now start to move higher. So I think we're in for a pretty good period. Let's just have a look at the gold mining indices. This is the GDX, which is a basket of the top 16 gold miners around the world. And to me, what's happened here over the last 8 or 10 trading days, it's very much like a base being put in. Certainly the RSI has started to move up. It's formed a higher low. All we need now is to see it move a little bit higher, and we'll have a higher high, which obviously then defines a trend. So we're getting some divergence with the RSI moving up and the price of that index not really moving yet. And we're seeing the same thing in the juniors, the GDXJ as well. So fundamentally, I think there's a lot to like about the next few months for gold, and I think technically for gold stocks there's a lot to like as well. So I just thought I'd give you that update, and do with it what you will. Cheers.